What's going on, YouTube? In this video, we're going to go over Monster Beverage Corporation, ticker symbol MNST. Year to date, Monster is basically flat, slightly down 1% in the course of 1 year, almost up 15%. Monster doesn't report their earnings for about another 10-ish days, a little over 10, 12 days roughly. So maybe 2 weeks, you'd call it. And looks like over here for revisions on for the upcoming earnings are pretty equal weight, like 7 up and 6 down. So I think a little bit of some confusion there on Monster as what to expect for earnings. So we're gonna go through Monster's financials. After we go through the financials, we'll look through some other competition and figure out how Monster is margin-wise doing against the competition, and then run those financials through the calculator and figure out what Monster is valued. And after that, we'll take a look at the stock chart. So revenue, gross profit, net income here, all trending nicely higher. Very just clean, relatively flat uptrend. We can see our net income here has been a little bit higher before, but it is recovering and bouncing and continuing higher. Our gross margin's pretty good, 52%. Not the best they've ever been, but still pretty good. Net margins over here are 21.5% currently. Again, same thing, not the best they've ever been, but still pretty good. Growth rate at Monster, I mean, you look at the growth rate over here, it's pretty solid. It's sitting at least 10+% for a relatively, average at least on revenue and EPS. Return on invested capital, again, same thing, not the best it's ever been, but still pretty good, 17.9%. Cash to debt. This company has a lot more cash than debt, which is always very, very good to see, especially when there's a little bit of a troubling economy ahead. And you can see over here, cash to total liabilities. Basically, they have all their liabilities in short-term debt. They've only got about 300 mil in long-term liabilities. So pretty solid balance sheet on this company. Net income to free cash flow. We have more net income than free cash flow. Always good to see. And you can see also in a nice trajectory higher. Free cash flow, little bumpy ride here, but overall trending higher and at all-time highs for free cash flow. Very good, very good. Share count dilution. We have been slightly declining, so they're buying back some shares along the way. I do believe so. They are issuing shares here and issuing more common stock, but buying back more than what they are issuing. So the share count overall is getting reduced. Capital expenditures are at all-time high, well, near all-time highs here. But again, these are kind of nominal numbers. You're only talking 191 million in capital expenditures. So pretty good on the financial side of things on this company. Like very, very, very good. The thing that impresses me the most though is this cash to debt here. So I really like to see that. I'm very interested in companies when they have more cash than debt. Over here, the competition, we have 4 other companies, or actually only 3 other companies to compare to. We have Pepsi, Coca-Cola, and Celsius. So on Monster, we have only one red flag. We've got operating cash flow is higher than net income, but really only nominally, so nothing to worry about there. Market cap 2. Hang on. Market cap and revenue on this side, we can see Pepsi and Coca-Cola are leaps and bounds ahead of everybody else in market cap. Revenue, gross profit, kind of same thing, kind of throwing this chart off. For 5-year growth rate, Celsius has quite the growth rate coming up for the next 5 years. Monster, not too bad either. I mean, that to me is still a really solid growth rate, 10% revenue and 20% EPS growth rate for the next 5 years for an average. Gross margin across the board, 52% on Monster, and not too far away from the competition for gross margin. So that could tell us that maybe there's a little bit of room for this company to squeak out a little more gross margin. Operating margin, the best operating margin on the board, pretty good. Profit margin, just slightly below Coca-Cola. So I mean, profit margins again. I mean, you're going up against a company that's been around for I don't know how long Coca-Cola's been around. What, 100 years, maybe more? I'm not real sure. But you're dealing with a 100-year-old company that's doing 23.5% profit margin, and you're sitting right there with them. And you're a growing company with more growth than what Coca-Cola has, and pretty dang good over there. I like that. Now, free cash flow. Obviously not doing as much revenue as the competition here, but we do still have positive free cash flow. Return on invested capital is the best PE, definitely the highest PE. But again, you're paying for a company that's got really good margins and some pretty decent growth ahead of itself. So you're going to pay a little bit of a premium for this company because of that. Pre-launch valuation. We get a pre-launch fair value of $32.55. Multiples comparison. Celsius is not a profitable company, so we get between Pepsi and Coca-Cola $33.99 per share. Manual PE, we take our market cap minus cash, add in debt, divide by cash from operations. That gives us 33 years before we earn our market cap, so we are overvalued based on this metric. Price to book, 5-year average 7.9, currently 6.6, so we are a little undervalued based on our 5-year price to book. PEG ratio, telling us we're a bit rich on the valuation. This is still a little bit of a growth company, in my opinion. I mean, we're still doing pretty good growth rates at Monster right now. Grams valuation gives them $37.98 per share. Discounted cash flow. Their average growth rate 14.3. Analysts are predicting 17.4. I gave them 15.5 for their future growth rate there, and that gives them a discounted cash flow price per share $42.53. Down here at Rule 72, we have 3 different sources for an EPS growth rate for an average of 18.8. That goes into 72, 3.82 times, and then that goes into 10 years, 2.62 times. So we get to double our EPS 2.62 times. So I gave them a 7 for a future EPS. Could be a little higher, but I'll stick with a 7 on that one. So here we are at our summary. Monster currently trading at $49.98 per share. Our fair market value on the company is $42.61, 30% margin safety, $29.80. Analyst price target of $60.87. Now let's take a peek at the stock chart. Let's see where Monster might be headed, technically speaking here. So one thing that is a little concerning right now, so we're on the monthly chart too, is this, this has fallen pretty heavy. And usually if you do a gradual pullback, it's usually can confirm, if you do pull back to a trend line, then that usually can be bought. But when you pull back at such a sharp, steep angle like that, they usually don't hold and they pierce right through. So if that happens, there's a real good chance if this pulls back, it could somewhere see maybe support around $40 per share. And I think based on this company, on the financials and balance sheet and everything like that, I think that's a good place to pick up some shares on Monster, in my opinion. I would definitely be interested in picking up shares on Monster in this range for sure. And I think it's going to pull back to it. I don't think it's going to get there tomorrow or next week or next month. I think it'll take a couple months, and I think we might see that. One of the biggest headwinds, I believe, for this company, though, is going to be that Ozempic weight loss drug pill that people are taking. And that's got a lot of investors a little timid as to how impactful that's going to be to the overall, consumer industry. And, there is, I know Pepsi's making smaller portion sizes, so that might combat some of that, combat some of the potential loss to the revenues. But also Pepsi just reported, I believe, in their report saying that they don't see that drug impacting their business right now whatsoever. So maybe it's nothing, but it is a potential worry for these consumer businesses such as Monster. But that is it for Monster. If you found value in this video, drop a like, subscribe, and comment. We'll be back later with another stock analysis video.